Greetings, Dr. Jeffrey Scott, and this is my weekend market update for the week ending Sunday, October 23rd, 2022. An interesting week in the market. Started great, ended great, kind of weak in the middle. And the question I have today is, can the fledgling bear market rally withstand the coming week of earnings and news? My email address, as you can see right there, is hgsidoc@gmail.com. And this is a week that I'm doing things a little differently. It's going to be a longer than normal because I get a lot of questions. Do you still use HGSI? Do I still need HGSI? And the answer is yes. I'm going to show you how I integrate my analysis using both Wealthcharts and HGSI. I don't think I have one program that does everything for me, but I have programs that each add something that the other one doesn't do. So hopefully, as I go through my weekend market update, I'm going to show you some of the strengths and weaknesses of both programs and why together 1 plus 1 I think equals 4. So let's get rolling, and I don't think you need to see my picture, so I'll turn that off. All right. As always, this is for educational purposes only. Anything I recommend should be considered in the spirit of education and is not investment advice. I am a doctor, not a broker. I am independent. I do have a package I sell as an add-on for Wealthcharts, but I'm not affiliated with any software vendor or trading company. And the tools demonstrated are those that I use in my daily trading. And I have paid for all the tools I will demonstrate. Trading involves risk, and you and you alone are solely responsible for any investment decisions you make. I often use options in my trading, and one has to remind everybody that options can be considered risky, and don't trade options without knowing what you're doing, perhaps consulting your financial advisor, and at the minimum, going to the Options Industry Council and reading all the disclaimers of why there's risk. Haven't put this up in a while, but I think it's important to remind folks that I have learned from a lot of people. And Ian used to always say, I'm not a guru, I teach you to be your own guru. Well, to me, Ian was a guru, but I hope I can continue on with his tradition, and that's why I do these videos of helping others become better traders. A lot of my influences are right on the sheet, whether it's Ian here, his sidekick Ron, O'Neill's book, Where It All Starts with How to Make Money in Stocks. I can tell you whenever anybody asks me to mentor them, first thing I do is tell them to read that book. I still read it on an annual basis. Morales and Catcher, who worked for O'Neill. Mark Minervini, perhaps one of the best known of the current. Slim, not really a graduate, but he certainly is aligned, which is why David Ryan speaks so often with him. John Person, my buddy in Palm Beach. Van Tharp, who we lost this year, position size money management giant. My good buddy Sager from Superior Profit, whose tools I will point out during the session. Rob Hoffman, who is the founder of Wealthcharts and someone whose software I went back and looked. I bought it in 2011, a great trader. And then may rest in peace, George Lee, good friend, great trader. Boy, do I miss him. For those who don't know, the HGSI program, here is a link to the website. You get a 30-day trial. And if you're a new user, email George, tell him that Dr. Scott sent you, and I bet he'll give you a little coupon code to give you a little bit of a break. New users only, and you better do it before your 30-day trial is over. And then on Wealthcharts, Rob Hoffman, who's a proprietor, has 4 of these Wealth 365 events during the year. And it's those events that he offers us at the best price. Now, he also does some during the year other events. That's when you want to get Wealthcharts, at the 365 or the other events. So go and register at one of his sites, even at a site that I show you, stocksanddocs.com. And then what will happen is the next time he's having an event, go to it. And if they offer you wealth charts at the annual low price, which I won't state because who knows if he keeps it, that's the time to buy it. But that's the website, tell you all about the program. To me, everything starts and ends with stage analysis. This is a slide adapted from Stan Weinstein's book, Secrets for Profiting in Bull and Bear Markets. And where are we in this market? If you had asked me on Wednesday, I would think that we're kind of doing this and that we're in a stage 4. We rallied on Monday and Tuesday and then sold off Wednesday and Thursday. But now you ask me on Friday, it almost feels like we're here. So the question is, are we ending the bear here? Are we coming to the end of a stage 4 downtrend and beginning a new basing period? Are we, in fact, in a stage 3 and just a violent stage 3 and still could break higher? Or are we in the midst of a stage 4 and have a long way to go? I think these are all possible. I'd probably put my money on the midst of a stage 4 and have more to go. But I want to be objective, and I want to recognize that some of these bear market rallies can be fierce. And in fact, if you look at 2001, 2008, there are 5 or 6 20% rallies in each of those bears. So I'm going to talk more about stage analysis later, but there's a tool that I helped invent at Ian's urging, about 5 of us. Let's see, Manu, Bob Meager, I believe, Gallardi, Dave Steckler, and myself. I think Robert Minkowski as well. And we developed an indicator that was a great trending indicator. And if you look at it at multiple time frames, it can help you figure this out. So when I am in an uptrend, the longer term bongo, which is built into HGSI and into Wealthcharts, the weekly bongo, when it's long, that tells me the longer time frame is in an uptrend. When the daily bongo is long, short-term uptrend, short-term downtrend, and I can start to identify these stages. And what I really like to find are when stocks are going from a pullback to a break, to turning around, when we might see the daily bongo reverse in the direction that I want to take the trade. So we'll talk more about this as we go, but this is sort of my cheat sheet of how I look for trades. So my favorite trades are pullbacks and uptrend. And in that, the long-term bongo's green because we're in a long-term uptrend. The short-term bongo is likely turning red as we pull back. And I want to buy it as we show momentum off support, and we'll talk about some of those signals. I also like bottom fishing. Now, I don't like this as much, but come on, in the markets we have today, almost everything is bottom fishing. And to me, it's a break above the trend line and a retest, and the next move that I want to buy. And then, if you don't believe that Darvas boxes exist, and I know you do, just go look at the Russell 2000 in 2021. It moved between support and resistance for the entire year. There's matching short setups, and I can find these setups, whether I'm looking at HGSI, Wealthcharts, Thinkorswim, TradeStation, because in each of those platforms, I might as well throw an EdgeRater and Q, I have built in my tools, or there are other tools available that make it as easy as the others. Now, I am now committed, booked, deposits are paid, and we're going to have this thing. So, official announcement. I have booked the Palm Beach Gardens Hilton Garden Inn for a 2-day event, Sunday the 4th, Monday the 5th. John Person has a 2-day event on the 2nd and 3rd. I hold it back to back because I know there's a handful of you that will be going to both meetings. I take my responsibility of holding a meeting seriously. I cover everything except for your hotel, travel, and registration. By that I mean all your meals during the program, including snacks and beverages, are provided. I have an event dinner on Sunday night at the Capitol Grill. All recorded and archived material from the last live events will be shared with you before the program. You'll get a live recording from my screen at the meeting, although it may come the next day, and I will share my non-proprietary, meaning free indicators that I have accumulated over the years for TOS and some for TradeStation, including my dots. Limited for now to the first 15 registrants. If I fill up quickly, which probably won't happen in the current market climate, I will consider adding more, but right now I've committed to 15 people. Every time I commit a number, I'm sort of committed to that number, and it costs me whether I have them or not, so I wanted to go to a more modest number. So some of the material inclusive, not everything, and I should put add to this Q. Some of the things that we're going to talk about at this meeting, what I learned from Ian and other masters, plus George Lee, who I consider a master, how my favorite setups, I just showed you how I find them in your favorite packages. Seasonality, whether it's me or I get somebody else to attend, I've got somebody I want to invite now that I booked this. And then using what we've learned to perform your own weekend review. On Monday, we'll look at a pre-market prep, options and how I use them, money management, my A-trades, earning roulette, and defining your own way to look at the market, your own A-trade. There's a number of other topics we'll splatter in, but I do pretty much a deep dive into what the things that I've learned from the folks over the years. You can fly either into PBI, which is 20 minutes away, or Lauderdale, which is 55. If you bring your spouse, your friends, your kids, there's an additional fee for meals for guests. This will be live only, no online, $1,000 per person. $500 a day to some folks is probably a lot of money. I've done a number of programs that don't feed me or take care of me very well and charge a lot more than that. And, I don't do this to make money, but I got money I put out at risk. So my job is to make sure you get at least $1,000 of value. So if you're interested, and, to my friend and his son on the western side of Florida, I've got a spot saved for you. But anybody else interested, please let me know right away. And for the folks that have let me know by email for the first week, I guarantee that you'll have a spot, even if I get to 15, because you gave me early notice, which is why I decided to go ahead and book it. So hgsidoc@gmail.com is my email. When you email me, I will respond back with a link to pay, as well as some particulars about the hotel, and answer any questions that you have. So let's go on to the charts. I start with, I'm just going to go, this allows me to go quicker. These are from HGSI. They're two views. One view is the top-down view that I've modified to be looking at how much off the 52-week high you are. And then down here are the sectors. So the first thing is in yellow are the major indices. And you could see even with the rally, the Russell's down 29.4, the Qs are down 32.6, and the NASDAQ itself is down 33% off the 52-week highs. Wow, that's still a pretty big deal. S&P still in bear market territory, minus 22. The NYSE is 18.9. And the Dow, which had a massive week, is now down only 15.9. Over here, it shows you how much you are off the lows. And if you notice, we're in the second week. We're completing the second week off of the June lows. I think it's pretty safe to say that if we break below those lows again, all bets are off. And frankly, I'm not letting any of my things that I own get below those June lows. But you could see we've had some moves, high single-digit moves now off of those lows. Bitcoin, the big loser, down 79% year to date. ARC Innovation, Kathy Wood close behind at 71. And then if you are a small cap growth investor, which I kind of am, that's the O'Neillian style, CanSlim. Not been a great year. The IBD 50, which has managed to change the holdings with the changes in the IBD 50 weekly, is down over 50%. On the sectors, you can see that communications, discretionary, real estate are leading to the downside. Now Q, I love this tool. Let me make it easier for you to see it. This tool allows me to look at a couple of different things. The buckets, it tells me 68% of stocks are now above the midline. That is a major, S&P 1500 midline, the Bollinger Bands. That's a major improvement over the last couple of weeks. That's a change. When you look at the darker colors showing where we closed Friday versus Thursday, I call that a shift to the right, a much more bullish approach. And now we've got very few things below or near the bottom of their Bollinger Bands. I see on Friday that all 11 sectors were up, 97% of industries were up, and 90% of stocks advanced. Now, if we look at this, let me change this back, at a different time frame, you could see over the 5 days, all the sectors were up. Over 2 weeks, all the sectors were up. And now we're starting to nibble into some of the badness we saw at the beginning of the month. Or should I say bearishness? It could be good if you're short the market. The warehouse report just gives me a sense of what style is working. And high earnings definitely had higher performance than low earnings. But interestingly, in what I think is a junk off the bottom rally, stocks with very poor relative strength, underperformers of late, outperformed massively. And stocks that had underperformed the prior week with the lower letters outperformed. And I basically, on the 14th or 15th, whatever was Saturday, I did a copy of the HGSI database by saving an archive workspace to an HTML. And then using EdgeRater, it pulls it in and slices and dices. The other thing is that for the most part, all the stocks were positive in the universe, or all the different slices of ERG, EPS rank plus relative strength rank plus group rank were positive. So a much more bullish week. Now, I like to track this just so I get a sense of the ebb and flow of the market. That's really what matters is down here. This is the weekly bongo. It's still red. That means we're not out of this bear. We're not out of this dominant downtrend, and you still ought to be careful. Now, if you look here, the percent new lows on the NASDAQ are still red, meaning they're all above 2%, and there's no percent new highs above 2% until you go back to August. That's bearish. Now, mitigating that, you had a kahuna on Monday and Friday. You had a eureka, which is, we're going to learn all these at the live meeting, how to calculate them, where to find them in the programs. Like I said, I've got it built into Wealthcharts. They're in HGSI. Actually, I take that back. They're not built into Wealthcharts. I haven't been able to get the Eureka, and I do have the Bongo and a version of the Kahuna there. So this is the NASDAQ. NYSE looks a little bit better in that you had some new highs come in on Friday, but you still got lots of new lows, still have a red weekly Bongo. The buckets, this here, which was September 23rd, is what an intermediate low looks like. 96% of stocks in the S&P 1500 were below the Bollinger Band, and 45% of them were below the bottom of the Bollinger of the bands. So when you have 45% of the stocks below the Bollinger Bands, you can pretty much predict that the next move is up or soon. Here's where we were last week, sort of a neutral look, and now you can see we've gone from 96 below to 62% below to just 32% below the midline of the Bollinger Bands, a much more bullish look. So maybe this is a good sign short term for the market. Now, when I see this pattern, or I see the opposite where it's too green, it's often signals of reversal. But I like to point out, I'm sorry for the blurriness, is that things can get pretty bad for pretty long in a bad bear market. And the point here is we had 5 or 6 days of we look like we're going to reverse in the bear market of 2008 before we did. Energy, the most notable thing here is what I think is the most manipulated market right now because of geopolitics. Natural gas was down hard over the week, 22% in the U.S., 20% in Europe, 21% in England. Crude oil was up a tad, I guess maintaining some of the enthusiasm post the OPEC cutbacks. You could see here. And other than that, nothing really jumps out at me. You want to see amazing. Coal is still up 70% on the year, but it's been coming down. It was triple digits before. Metals, good week, especially as the dollar eased at the end. But you could see gold and silver, especially silver, had a move this week. Steel dropped. Interesting, the earnings on some of the steel companies were good. And when you look at things like U.S. Steel, really teeny weeny multiples. If we are shifting from growth to value, I wonder if those things are coming back. The Baltic Dry Index, spot index, really isn't doing much, which tells me it came off the lows, but it's still in a downtrend. And Star Bulk shippers, Zim, and other dry bulk shippers are not things that I like to play when this is falling. Interest rates and how do they matter? 10-year spiking, 30-year spiking. Look where we've come since 2020. It's really unbelievable. And it's that steepness, I think, that is killing the market. Now, over here shows that we are still inverted. And the point that I made here is that when you invert, the bear market follows. The recession follows. You invert recession. That tells me recession is still coming. I know there's a lot of pundits arguing one way or the other. This is credit risk. How tight is money? It's come down. It's still elevated from where it was in the run-up. And if you don't believe that this matters much, here's the 2018, 2019. And look at what happened in 2018, 2019. I think there was some quantitative tightening that occurred, and when they stopped that, the credit risk came down. Overbought, oversold indicators. If I look at the stocks above the 200, stocks above the 40, 13-week new high low, all of them are moving into neutral, none of which are showing us a lot to be concerned right now. If I look at the economic news for the week, there's some manufacturing PMIs and Case-Shiller on Monday and Tuesday. Thursday, we've got some jobless claims and some GDP, but I think the ones that are really going to be important this week are going to be a couple of things. One of them will be the PCE and the consumer index occurring on Friday. So I think there's some major moving news coming this week. And oh, by the way, it is earning Lollapalooza week 1. There's a couple of weeks that look like this. You've got something for everything here, whether it's if you look at Monday, Range Resources, Energy, Zions Bank, Tuesday, UPS, Microsoft, Alphabet, Coca-Cola, Visa, Cliffs, Halliburton, Chipotle, Wednesday, Meta, Ford. Wow, look at all those stocks. Thermo, KLA Tencor, Friday, Shopify, Amazon, McDonald's, Intel, MasterCard, and then Saturday you got some energy and a few other things. When you take that big news and you take those earnings, you got to believe there's some big stuff happening in this market this week. So that's why my title was, can this relatively new bear market rally withstand them? Little positive news that could actually fuel it higher. So expected moves. How good of a week was it this week? Well, look at the S&P futures. Expected moves, the market makers thought the top would be here at the green line, the bottom at the red. It opens at the close of the prior week. And we traded up Monday and Tuesday, pulled back Wednesday and Thursday, and closed at the highs of the week, way outside the expected moves on the S&P, the NASDAQ, the Dow, the Russell. You look here, the VIX closed near the bottom of its expected move, as did the dollar. So those are things that are positive for the markets. It just said it was a super strong week. Let me do this thing here, fix this 1 second. There we go. There we go. So the market started end of the week strong, which led to strong gains, as we showed you. Mixed messages on the extent of further rate hikes, as well as positive analyst calls, contributed to the week's highs and the lows. We've come off oversold areas. Be interesting to see how we digest the news. And I deployed a bit more of my cash this past week. I think this rally may have some room to run. But I also remember how quickly we failed the last time. I keep my positions at the beginning of a rally like this small. I have tight stops, and I keep cash, and nothing stops me from deploying cash as we go along the way. If you like my videos, you can always let me know, respond to my email, respond within the YouTube regards, or send me a note in the HGSI forum. But I also have a website where I do, and again, for fair balance, predominantly wealth charts videos. As I said, I have a product there that I like to sell, so I might as well promote it there because that's the only place I sell it. I have nothing to do with the ownership of wealth charts, but I do have that package. Stocksanddocs.com is a website where I post videos on a daily basis. All right, so that takes care of that. Let's close that down. Boom. So this is, I always cramp down the screen size when I'm doing these videos to save space and help people lower resolution. But during the day or week, whenever I'm at home, I've got a 4K computer. So let me just open these up now and show you some of the strengths of HGSI. Now, those who may be here because you came from elsewhere and don't know HGSI, see if I can show you the bar. So when you start HGSI, you're going to see this. I have opened up the designer here, which is, to me, actually a critical part of HGSI. It's my file cabinet where I keep all my information. I opened up the warehouse view, which is sort of a spreadsheet that allows me to look in detail at each stock, index, etc. And then I have a daily chart and a weekly chart. Now, the key part of the warehouse report is this view. And the view is a combination of a filter, which tells you what to include, and then ranking, how to rank it, and then what things do you want to put along the side as being things you might want to look at visually. So, other key thing that I love about HGSI is that there's these things called custom groups, and under the HGSI Top 50, every day it produces a list of the top 50 stocks. Those top 50 stocks, it's computer generated, and it basically takes the stocks that populate the smart groups, of which I'm going to show you momentarily, and it puts the best stocks from the most smart groups collect into this top 50. So if you really want to make your life easy, all you got to do is look at that top 50 and turn off your computer. Another thing that I like about it are these smart groups, where smart people, and you have to turn them on up here in manage group subscriptions. You have to turn on the ones you're using. But you've had smart people. My friend David Gallardi has his sprinters. Gil Morales has his Bible gap ups and pocket pivots. Ian and Ron have a number of scans, Best of Woodward and Brown, Best Stocks, HGS 100. I've got a number of my favorite scans here, volume, pullbacks, reversals. And then John Person, if you subscribe to his package, which is additional, has a number of scans. What the top 50 does is it takes all the bullish scans, runs them, and then tabulates which stocks are in the highest number of those bullish scans. It's kind of very cool. And then the user group is where I spend my time, where I have a number of scans that I do in this program. I've got my smart groups. I've got some lists that I bring in from investors from MarketSmith or IBD. And then I have my TradeStation scans. So I kind of use HGSI as where I put everything. And the beauty of HGSI is for me to share this among my computers, I just have to highlight that, go to expert groups, and then I export it, and it can be imported into any other machine. So what I like to do, and I admit I'm a little bit anal with this, and I think my wife wants to kill me because of the time I spend in, but I basically build a list of various things from various sources, and I mentioned TradeStation scans as well. And then I collect everything, and I put all of my stocks into this thing called consolidated buys. Then I put a price and volume, and at least over the weekend, and my weekend analysis is much more detailed than during the week because I don't have time to do this during the week. I can run through my entire list of stocks on the weekend one at a time. Now, Wealth Charts adds algorithms and different types of scores to my analysis and allows me to do it quickly with different parameters, and I'll show you how I do that. So I've built my watch list, and then I will go through a tops down and a bottoms up approach. The top down, and let's look at it here, would be I'd start with going into the major markets. So I use one of Ron Brown's market analysis folders, which is O1. I go to the warehouse view and I put the top down view on. And then if I rank them by raw combo, you could see what led. Gold miners, silver, the Dow, small, mid, NYSE. Boy, that was a bullish week, wasn't it? And what lagged? Natural gas, bonds, the dollars and commodities and VIX. That really fits what it was, which was a very strong week in the markets. All right, now let's do this. And let's I'll look at a number of these things first. And I'm going to try and show you why I have some bullish feelings about the market. But we got news and things going on that can make a change. So the bad news is this is the 200-day here is a falling blanket over this downtrend. The 50 is in a downtrend. What happened on Friday is we broke above with a very tall bar. We broke above the 17 and the 8. We took out a chandelier stop. We're in a person buy since down here. You see 3 kahunas over the last 7 bars, and we came out of a mobile breakout from a squeeze. All those things are bullish and great. What mitigates it is we've got the weekly bongo is red. We're in a horrible downtrend on both, and we've got to get through the 50. We've got to get through the 200. Can this run a lot more? Sure. And if it runs up and fails at the 50 or at the 200, it gives us a whole new place to short from, which is pretty cool, if you ask me. So that's the S&P. If I look at the Dow, we're going to do this very quickly today because I want to spend time in both programs. Let's look at the Dow Jones. The Dow Jones is also doing the same thing, but it's been the big mover. Its kahunas came in earlier. These green things here, which occurred Monday, are eurekas occurring on the NASDAQ and on the NYSE. Eureka is a bullish follow-through signal to the upside. And notice the Dow has already run up to the 50s. So this is an area where you expect a potential reversal, and a breakthrough there may actually get me to commit some more of my hard-earned cash. If I look perhaps at the Russell 2000, and in HGSI we're using some ETFs, and Russell also had a big day on Friday with a kahuna, a pocket pivot, mobile breakout from a squeeze, but it's actually further down in its patterns, especially when you compare it to something like the Dow. And then the NASDAQ, which is probably more relevant to me and a lot of other growth stock investors, you can see here that the NASDAQ had a kahuna, it had a eureka, has to get above its chandelier stop. Also mobile breakout from a squeeze. So what I see from each of these is the markets are trying to move higher, but I also have to acknowledge they're in pretty extensive downtrends. There are other things I'll look at. I'll look at the IBD 50 ETF, and you could see it's bouncing here on the bottom. It really hasn't done anything. I might look at the FANG. This is a 3X FANG, just awful. I'll look at the dollar, and there's a couple of things that we use on the dollar, but it's the ETF here, dollar, that's bearish. Somewhere up here is going to be dollar bullish. I know where it is up here. UUP. It's much easier to do this, I'm afraid to say, with a 4K monitor, but it's hard to see if you don't have one. You see the dollar broke down, and that tells you a lot of things. So I can do the same analysis in wealth charts as I can do in HGSI. HGSI has advantages, and so does wealth charts. HGSI, the data sits on my computer. Changing charts is incredibly fast. If I'm sitting on a plane without internet access, I can access the data. But what it doesn't do is give me real time. And if you are interested in minute charts and things like that, it doesn't give you intraday data either, or futures. All right, the next part, which is one of my other favorite parts of the program, is go into '07, which is industry groups. And you could see, I don't need a filter here. Let me take that filter off. There are, let's see, we'll make sure we get them, 174 industry groups. If I look at a 2-day force, which is a very short time move, it tells me that 87 are going up. 2-day to the downtrend, it's only 1. It just tells you that the market is very bullish right now. Longer term downtrend, I've got 4, and longer term uptrend, I have 84. So this market has turned around because those numbers were the opposite over the last couple of weeks. Again, something to be bullish. What HGSI does better than any other program in the market, okay, is, let me just rank these, is if I highlight something and right click on it, change to index group, it brings me up. And I've got them ranked and I can look at them one after another. And so I typically go through, here, let me open up the earnings window, which compresses things a lot at this resolution. But what I can see here, NVIDIA is bottom fishing, don't like the earnings growth. I got to double click on that, okay. AMD also bottom fishing. Micron is starting to move up. You can see Micron had a kahuna, a mobile breakout from a squeeze. Its weekly bongo went green. That one's interesting. Texas Instruments starting. Broadcom is one. Is it in a small uptrend? I'm probably pushing my luck, but it's turned around a little bit. Pocket Pivot, kahuna. Mobo, still in a weekly bongo. And what I typically will do here is I will go through from top to bottom and look at these. Exploration and production. Occidental Petroleum, it's a holding I already have. It's moving up, had a strong week, and still below its recent highs. It's got the Warren Buffett put, and you could see earnings per share growth rate of the next quarter and the following quarter, or this quarter and next quarter, compared to multiples, very strong, and a small dividend. What else is in energy here? Devon, another beautiful chart. Pioneer, another beautiful chart. No surprise, EOG. So I'm going to show you a different way of ranking them. Here I'm just looking at 2-day force, which is looking at price change and volume in the analysis. So we'll have to see how energy does this week, but those look good. And backing up, the next group down is oil services. So I typically will go through the top 10. Schlumberger just had a big breakaway this week. It may be too far gone. Its earnings are out, but Halliburton's this week. And so let me double click there. And if we look at Halliburton, Halliburton hasn't broken out yet. Look at the earnings per share growth, the expected 100% growth, multiple of 22. It pays a small dividend. I could tell you as I went through my broad list of stocks this week in the market, we saw one energy service stock after another. So to keep this from being a 12-hour event, I will go through typically the top 10 groups, integrated oils, base metals. I want to point out a couple here. Look at Freeport-McMoRan, and you could see basing now for 4 months. It had a mobile breakout from a squeeze, a weekly bongo turned green, a person buy signal, and a kahuna on Friday. Earnings per share growth is horrible, but it's a nice setup. I would worry about the 200-day being resistance. Another one that's similar that I like, and I don't know if it's wrongly classified, is Techninco, because it's classified under precious metals, and it's really, to me, an iron ore and a coal company, although it does nickel and rare earths and others. But it too looks like it's setting up, and a break above the 200-day I would consider to be interesting. Now, if you're purely a can slimmer, you can look at something called the HG within the Woodward and Brown groups. The HGS 100 is based a very similar model as CanSlim to find some of the leading stocks. I mentioned steel, 7th and 8th group. I typically will look at stocks in the top 10. And since I'm a top down guy, I looked at the market. I said the market looks good. I've now identified which are the top 10 industry groups and started looking at their top stocks. And probably the safest way to trade is to find the groups in the leading industries and buy the stocks in the leading, find the industries in the leading sectors and then buy the leading stocks in the leading industry groups. And I don't know of a tool that does that better than HGSI, especially if you're good with offline data. Now, yes, you can update data using Thinkorswim, but you still have the joy here of being able to use this without internet. Now, I don't really have a whole lot of negatives about HGSI. I can pretty much create those views by creating my own filters and my own ranking modules. The only thing that, besides the not being real time, that I would, and it's not a criticism by any means, and I'm being honest here, I love them both, is that there's not a lot of third parties that are putting their tools inside HGSI. I was instrumental in getting John Person's stuff inside. I would say the success of that has been modest at best. And part of the reason this program is great is its speed, but part of the reason it's hard is because there's a third party cannot add things independently. They would have to go through the company. So that's how I use HGSI. I go through the numbers, and then once I've made my analysis, I've created, and I've done this thus far today. In fact, I'll show you what I've done. I've gone through that top-down review, and I showed you that consolidated buys list. Let's see if I can get this up here. Go down to text files. So I've created a number of watch lists. And then what I'll do is I'm going to take my list of stocks. So the consolidated buys came from all these stocks, all those lists. I combine all the bullish lists into one bullish list and into one bearish list. I then run technology. By technology, I run TradeStation to find winners, the Q tools in TradeStation, but I also import them into Wealthcharts. So let's talk a little bit about Wealthcharts and how I integrate it. So I built my models. I dumped them into text files and these CSV files. And then within Wealthcharts, I got to find something that I know has, let's see, has a watch list. I can import those CSV files. So I've already done all that. So on Friday night and Saturday morning, I go through every chart in that long list. Like I said, that doesn't work for me during the week. I can spend a lot of time on the weekend because my wife and I sort of have an agreement. She leaves me alone and Sunday is hers. So let's take a look at how I address some of the same things and different things within Wealthcharts. And again, they are complementary in my book. We'll start off by looking at the markets. Here you have 3 time frames of a bongo: daily, weekly, and monthly. This is the high jump bar that I modified. When it's at plus 100, we're extended to the high. When it's at minus 100, we're extended to the lows. And you can get a sense of where we are when you put your thing on. You'll see it'll light up on the right-hand side. This is volume. I've got a 50 and a 200 period, and this is a 5-minute chart. This is one of the reasons why I like Wealthcharts. And yes, you can do this in your Thinkorswim or TradeStation. I'm not saying that you can't. And as I said before, I'm showing you what I do and what I use. I have no ownership of Wealthcharts. I don't get commissions from anybody. All right, so on the 5-minute chart, you could see that on Friday it actually stuttered at the open and then just went up straight the rest of the day, closed right off the highs. If we go into the daily chart, again, you can see we still have a daily bongo is green. The weekly and monthly are red, and the white is the June highs, the yellow is the June lows. The white here is the pre-bear market highs, and this is the spider. So why did I like this day so much? I like this day so much because we took out a falling 20 daily, moving average. My next target here is closer to 388, which is the 50, on very strong volume. And to me, the S&P's had a great day on Friday. If you look at the weekly chart, you could see they held at the yellow line, the June lows, and really propelled off of it. So a strong week, whether I look at intraday, daily, or monthly. If I look at the daily on the Qs, big move off of the June lows. Diamonds trading all the way up to the 50 already, like the SPY. The Qs just took out the 20-day. The Russell also took out the 20-day. Now you'll notice here the white line for the June, the pre-2020 highs before the bear could be above or below the June. On the Dow, the June lows and the pre-bear highs were the same. The Russell June lows were actually below the pre-bear highs. So the four indices look good. The VIX has come down, which is good. And we could see a bearish engulfing pattern really taken out about 4 days on the dollar. So a weak dollar would certainly propel the market. On the commodity side, I'm looking at ETFs again, but I could pull up futures. Now the problem with the futures is I got to add a different feed. So it connects to, I'm already connected to Tasty Trade, so why is that not working? Oh, I know how to make it work. Let me save what I did, probably because I'm going back and forth between programs. And then let me do this, and that's going to say, do you want to leave? Okay, perfect. Start me back up. Let me go in here and let me connect. So you see you've got a number of brokers that you can connect to. And that should light it up here. Now I've also found sometimes on Friday, on the weekend I don't light up. I can tell you that the 10-year, like the dollar, was down on Friday. So I guess it must be a feed thing because it's Saturday. Now I mentioned when I did my PowerPoint, which I think I closed, that I have a weekly market timing signal that I use, which is based upon Weinstein's work. Now, it really depends if you are what's the word I'm looking at? Whether you want the simples or you want the W's on the MAs. The white is the WMA, the yellow is the simple. I've got them both here. The key thing here is I look at a weekly chart, and if the weekly price is above the MAs and the weekly bongo is green, I am great. Even if the weekly bongo goes red when I'm in an uptrend, if I'm still above the MAs, I am bullish. When I break down, especially when I fail a retest, and I break down below those indices and my weekly bongo goes red, then I go bearish. Well, where are we at today? We're below the indices with a weekly red bongo. I've got to be bearish here, although, doesn't mean I can't play to the long side. But like I said in the Excel spreadsheet, I play small. The Qs, that was the spiders, the Qs red and below, the Russell below and red, and then the diamonds, interestingly, and this is brand new, hot off the press, at least in this program, the weekly bongo on the Dow has turned green. We're still below the moving averages, but that's interesting, and that's a positive. Now, one thing that I like that I can do in wealth charts that I can't do in HGSI and in a lot of other programs is create ratio charts. So I have a ratio chart on the left that's comparing IWB big caps, the Russell 1000, versus the IWM small caps, Russell 2000. When the stocks are pointing to the upper right-hand corner, that tells me large caps are in play. Down here, small caps. So right now, we're closer to large caps. If I look at the hourly chart, small caps were in favor, and over the last couple of days, large caps are stepping it back up. Over here, I've got growth versus value, and you can see we're pretty much in the value camp on the daily. And when I look at the hour, we're in the value. So we've been at large cap value the the last couple of days, which to me is still relatively defensive. Now, another thing that I do the ratio charts with is I like to get a feeling, and I haven't moved my stars yet, so ignore the stars. I like to get a feeling of what is working in this market. And since all of these sectors have their own number, which is unrelated to each other, I decided to neutralize that by taking each sector and making a ratio chart versus the spider. So I'm looking for two things. I'm looking for a long run of green at the end, and I'm also looking for sectors pointing up here. Materials have some strength. Communication broke down. Energy remains strong. Financials, mixed. Industrials, mixed. Technology's trying to come off the bottom. Interestingly, and maybe it's because the market's doing better, staples have weakened, real estate have weakened, utilities have weakened. Discretionary is still weak. Healthcare has come off the highs. So really the big strength in the market is materials and energy, and next I probably will look at financials, industrials, and healthcare. So it's just a way to look at the market, and I can look at that intraday and get a sense of what's working now. And this is real-time updated. Obviously, I'm on the weekend here. And then the other thing that I like a lot about wealth charts, or let me back up. One thing that I use a lot, because there's a lot to like that I probably don't use, is the various scanners. So heat maps are in a lot of different programs. We can take a quick look, maybe, of the heat mark of the S&P 500, and we could see how strong of a day Friday was with most of the boxes green. It has a sector scanner. Frankly, it was built a lot on my specs, but I probably overdid it. Why did I overdo it? Because look at how many stocks are in these sectors. I'm going to talk about whether, this is too many. We get down to very small stocks. The good news is you really get to scan the entire universe of the market. But if you think about it, if you look at the sector performance in the S&P 500 and the S&P 1500, this may not match. And the reason it won't match is we've got 2,000 stocks in industrials alone. If you look under just the daily performance, you could see healthcare, lead, basic materials. Those are staples. We're going to leave that alone. And then industrials we liked, and the other one was finance. Now let's just see on the weekly communications, and I want energy. All right. So I am going to keep these 5 and hit compare. And this does bring up a list of all the sectors for me. And let's just take the top performers, look at that steel right to the top. And right now, this is just looking at percentage. Now they have an algo score. To be honest, I don't totally understand what goes in it, but it's another ranking tool. I believe it includes a lot of Rob's proprietary stuff. So I'm going to fill in the things here from the algo score. So I get the top industry groups, and you'll see where I'm going in a second. And then let's take a look at the weekly algo score and see if we missed anything that are up at the top. And let's pull these in as well. There's your coal, financial exchanges, consulting, marine shipping, healthcare. All right, so now I've picked about 30 industry groups. And let's hit compare. And what's going to happen here is we are going to bring up the top stocks in those top industry groups. So I could take however way I want to rank them, but let's take the daily algo score and let's take them all the way down to 700. That's a good number. All right. So I've now chosen the top stocks in the top industry groups. I'm going to make sure that I'm pointing to the right watch list, which is weekend review. Perfect. And then I'm just going to go add to watch list. So to do a top-down review in this program, what I basically did is I looked at ranking the sectors different ways and independent of what I did in HGSI. I pulled out the top industry groups and I broke out the top stocks. Okay. Now, I should have showed you before that weekend review was already populated, and it was populated by those groups that consolidated buys in HGSI, the consolidated bear list, and then I have something I call the combo list, And the combo list are all the ones that are kind of IBD, Market Smith, and growth related, and Gallardi sprinters and a few others. And that's where I go fishing from during the week. So I've now, let's say I've created my watch list. Now here's one of the big differences. They're using their algorithms to rank things from top to bottom. So this tells me, using those algorithms, and the top-down indices is a basket of maybe 50 to 100 ETFs that represent sectors, industry groups, and the like. And it gives me a sense of what's working now. Now, very aligned with HGSI is oil services, oil producers, XLE come to the top, short ARKK. And the numbers matter. I usually only want to stay in the 7s and 8s. So energy is clearly leading this market. Now, I can also look to the bearish side, and there probably aren't a whole lot, but let's go to Wealth Scanner bearish, and let's see what comes to the top on the bearish, and I think it's only in the 400s. So ARC Genomic, social media, natural gas, bonds, Moonies, home builders, and then again, we've now dropped down. I won't go down, but you could see discretionary and even solar made it there. So I have an opportunity by using this built-in scanner to rank things from a bullish or a bearish perspective. Now, I mentioned I have a tool within Wealthcharts. And what I wanted to do, and after years of using HGSI, and as I said in the beginning, I use HGSI and Wealthcharts. That's my main two go-to programs. What I wanted to do was find a way to find stocks that are giving me my impulse signals. And I have a number of scans. I can do that in HGSI. But I wanted to pick how many had 5 signals, 4, 3, 2, and rank them that way. I built that into Wealthcharts. So let's go into my CAT scanner, and let's bring up that weekend review. Here's a bullish one. And let's set my CAT scanner. 5 and 500,000, at least one bullish dot, no bearish dots. And since I'm looking for pullbacks in an uptrend, okay, I am going to say I want the Bongo Daily to have changed to green within 10 bars. And I want the Bongo Weekly to be bullish, so it's already got to be in an uptrend. I'm going to hit apply, and I'm going to rank these by dots. So what I've searched for here, again, you must be in at least a weekly term uptrend, weekly Bongo. You could see on the weekly chart, this is the weekly Bongo. The dots have 4 dots, and somewhere we'll find a gap that has 4. Let's see if this one has 4. That would make my life easier. If it does, it probably does. The top dot tells me I had a big gap up. It's based upon, but with a few changes, Morales and Catcher Bible gap up. The next one is big volume. It's comparing the volume to the most recent days. The third green dot is a breakout, and the fourth dot is momentum. Then you have the squeeze, but a green means it just came out of a squeeze. I think that may even be more important, so I can scan for those. Then you have the PSAR, and then you have the green candle low and the red candle high. Here you have 3 time frames of the Bongo. Here is the high-low jump. Here is my relative strength versus the spider. And here is my on-balance volume versus a moving average. So this is how I like to look at charts. And then, especially during the week when I want to make my life easier, I go back to this list. All right, ASB, Associated Bancorp, 4 dots, giant volume, gap up, took out the moving averages, took out moving average on the weekly. This one looks good, and I might save this so I can add it to my watch list. Next one is HA, which is an airline. See, this is the difference between that gap and this gap is we closed below midway. That's why I only got 4 dots. I don't like how that closed. Hilltop Holdings. I know I like this one. 4 dots, broke out. Now, what don't I like about Hilltop? Well, Hilltop and everything else in this market is going to have a lot of overhead supply. But what do I see here? The weekly Bongo is green, so it's starting a new uptrend, at least short term, and that on the daily it had pulled back and just turned green. So that was the parameters of my scan. SMPL, simply good. This is what happens to the 200. You run into it and you can stall or fail. Still break above. I might watch it, but why buy it until it breaks above the 200? Ferris Residential, don't know that. This looks like an earnings story. Gapped up. AbbVie is one that I'm interested in. And AbbVie, basically, why am I interested? Because I'm going to set a buy stop right above the close, which is above the 200. 3 of the 4 dots fired. Daily and weekly bongo are green. Relative strength and OBV are above the moving average. Look at how nice the weekly looks. So I basically have ranked the stocks. So I've defined what I want, which are stocks that are in a longer term have turned up, the weekly. The shorter term they've reversed, and they've got momentum. Since I want to buy things that are moving, I've designed this to only bring things that are moving to the top. Now, the dots I have in Thinkorswim or TradeStation. I'll give them out to folks who attend my live meeting. And they're programmed inside HGSI, and they were in the chart, but they're a different format. Berkshire B also looked interesting here. You had a failed rally, failed at the 50, came down to the 17, and you had volume momentum and a breakout back above the 17. Your OBVs turning up, as is your relative strength. So there are definitely things to look at. Another one I liked was Cleveland Cliffs, but it's got earnings this week, so I have to be careful. 3 dots, took out the 50 in yellow. So I love the fact that I can use my scanner. But just to give you a sense of what's in this program, let's just do this, hamburgers. Let's type scanner. They have lots of scanners. Lots of scanners. A lot of scanners I don't even have yet. Imagine I haven't bought everything. So my scanners here, Dr. Keith Wade, who's my buddy, does both seasonality and some Heiken-Ashi work, is there. There's some built-in seasonality scans, and a lot of these come with the program. And so there's a lot of different scans that I might use. One of them that I like, for example, is the Wealth Signal, because the Wealth Signal scanner is that green dot. That's one of the Rob Hoffman. So I might put my list through it and look for things that have a new signal. And there were a number of them. AVGO also looked good to me. But now we're talking bottom fishing trades. Yes, you could say lower low, higher highs. Maybe we're in a new uptrend, but we're really cheating on that. Maybe. The weekly bongo's still red, so it never would have made my scan, but I had momentum in a breakout. I don't think it's ready yet, but it did have one of Rob Hoffman's dots come in as well. So what I do, whether I'm using HGSI, Wealthcharts, usually use them both, kind of in the order I showed you, is I create my watch list, I use my scanners, and then because this is a real-time platform, if you can't already do it in Thinkorswim or TradeStation, you could set price alerts. And the other really cool thing is you could also set alerts on indicators in this program. I'm sure I'm not doing it justice. I'm showing the things that I like to use. If I look at the bear side, I didn't find a lot of stocks to short today. Let's put the exact same scan in, but let's do it backwards. Different prices. Basically got it set up here already. Bongo Daily, okay. And let's see what it brings to the top. Does anything have a lot of dots? ACHC is a healthcare stock. You know, it did have a big breakdown, but then it closed near the high. I don't know if it missed earnings. I probably wouldn't be shorting that. What I like to short would be if it run back in there and then turn back down. And as I said before, this was not a week of me finding a lot of stocks to short. Let's see, what else can I show you? I bring those watch lists in that I talked about from HGSI. Here is that. The weekend review watch list that we just made also is the watch list that I brought in to the long side of HGSI. And yes, I could look at these charts one at a time here. I'm not saying I can't. But, and I'm on high-speed internet, and it's not bad. It's just faster. And any program, think about how slow TradeStation and Thinkorswim are. If it's on your desktop, it's faster, but you can go through lots of charts using this program, and I do. So there's a lot of different material in here. So what else does this have that I think? Well, I think I'll leave it at that. There's a lot of stuff, different tools there. What I wanted to show you today was how I put Wealthcharts and HGSI together. And to me, they're intimate. They work great together. And, the pros on Wealthcharts, real time, access to future feeds. I can actually trade within the program. Some of the alerts are different. And the fact that it's not an open platform, but it's a platform that they put in a lot of different people. There's me and some of my material, but they put in a lot of paid add-ons from a lot of folks here. And under the premium indicators, they have a single time frame, Bongo, and then they have my dots. These come as built into the program. To get something in Marketplace, sort of the deal is that you give him, or at least it seems, that you also give something as a freebie to the members. So in the two different programs, I use them together. Both have their pros. I hope you have an awesome week. And I guess, let me just stop this and then put up the invite again. Okay, I guess I wanted to end with this. This is, again, reminding folks that I am doing a live meeting. I am ready to take your payments and put you on the list, the first 15. All meals, all recordings, past seminars, my non-proprietary indicators, fly into PBI or Fort Lauderdale, $1,000 a person. If you want to bring a guest who doesn't come to the meeting, we can work out something on the feeding. And hgsidoc@gmail.com is my email. Have an awesome week. Look out for news and earnings.